All right, so we're going to talk about commercial, industrial, and income property. If you need help in any of these areas, then we were going to go through that. I think we have 7 lessons here we got to get through. I'm going kind of quick near the end here because I'm trying to get everything in on one video. Owning and leasing commercial properties. I don't know how much of this you're going to have on your test because this is not a commercial. You're not going to be a commercial salesperson. That's usually done separately, and you usually need a different test for that. It's much more difficult. And those who do commercial real estate totally understand what I'm saying. So I'm not really. It's good to know it, but normally you will have a commercial department in your brokerage that does this because it's more involved. And you definitely want somebody with experience. It's the same with investors. Consumers buy, sell, rent, and lease real estate for many reasons. Which of the following is a reason investors purchase commercial? All right, generate more cash flow. Okay, before we go too far, let's make sure we're on the same page for definitions. 3 types of property types: commercial, industrial, and income. Commercial is the retail stores, the restaurants, the office buildings. Industrial is the warehouse and factories. They should have put Amazon up there. Income is apartments or retail space for lease. Okay, retail stores are commercial, warehouse is industrial. These are pretty simple. Okay, generally no negotiation on leases. Commercial only? Negotiate leases? I mean, I think you can do both, right? No negotiation on leases. Oversee maintenance. Could be both. Qualify potential tenants, collect rent, evict tenants. These 2 here. What's it say about negotiating on leases? This is probably residential only. Negotiate leases. I don't really see anything on it. Okay, so good, we made the right choice. Negotiation of leases is a key difference between commercial and residential. Negotiate leases is on commercial only. Usually you can't negotiate on residential. Yeah, I guess that's true. Which of the 5 items are likely to be considered trade fixtures? Belong to the property, but what's it say? But are instead the tenant's possession. They appear to belong to the property. Try again. Okay. Light fixtures too, maybe. It's saying 5 items. Refrigerator and freezer, maybe. All right. The oven. I don't see too many people taking an oven. I mean, that's like really bizarre. Maybe in 2022, when the supply and demand is bad, they're like taking ovens. Oh my gosh. For example, any equipment that a tenant installs in the property to conduct business is likely a trade fixture. This would be no. tenants are generally not responsible for damage caused to the property by the installation and removal of trade fixtures. No, the tenant is responsible for removing any trade fixtures when vacating the property. If the tenant doesn't remove trade fixtures by the last day, the fixture becomes the landlord's. Okay, this one is true. All right, trade fixtures belong to the tenant. Accessibility in commercial buildings. I'll have to remember that about the oven. That we could take the oven if it's ours. It's a trade fixture. Okay. Do you have any idea why Sal was concerned? Sal called. He was standing on top of the sloping walkway that provided an alternate access to the storefront. The new coffee shop owner had set up a couple tables with chairs for outdoor dining. Sal didn't say anything to Jerry, but Jerry got the distinct impression that he wasn't the answer he was looking for. I have no idea. Accessibility. There are 4 areas where commercial property owners are advised to focus their attention when removing barriers. Access to the restrooms, goods and service, approach and entrance. That must be what they're talking about here, approach and entrance. Of course, Sal was concerned about accessibility. What else could it be? The responsibility for ensuring a commercial property is accessible lies with a few individuals, especially if they're handicapped. You need to make sure they have accessibility. The property owners, property managers, tenants, local inspectors. There are 2 parties that are required. Property owners, property managers complying with ADA. So this is the American Disability Act. That's why it's very important, okay, that they are able to get in and out of the building. Accessible to all areas, including non-public areas, is not a focus. Investors and tax depreciation. All right, redemption time. 1031 tax deferred exchanges. There's a lot of things to consider here when you are doing a investment property. Depreciation. There's also economic depreciation. You have to go to your accountant. If your client starts asking you questions about this, you need to send them to an accountant. Don't try to be the hero and be an accountant offering advice, and then it turns out wrong, and you'll lose. You could lose a good client, and then you could lose referrals from that client, and it's not really worth all that. So just send them to an expert tax person. Investors like tax depreciation. I can tell you that I do too, because I'm an investor. So we like having cash flow, and we like taking off these tax thing. Anything that helps take get rid of taxes on our tax time. Anything that helps us get more money back, not owe as much. Yeah, it's all part of the game, and we got to learn that game, right? That's what this channel is about. Learning that game. We're not going to give all our money to somebody in the government that doesn't know what they're doing with it. You can give it to me. I know what to do with it. Not a problem. I can make it 100 times more instead of spending it all. All right, they're giving you some examples. They're giving you some math problems. For those mathies out there, which sometimes I am and sometimes I'm not. And I'm getting tired of this course, so right now I don't feel like doing a lot of math. All right, with regard to investment property, what are the 2 types of depreciation? Economic tax, depreciation. One example of economic depreciation is when the asset is actually worth less because it's deteriorating physically. I don't know about that. That could be true, yes. All right, by depreciation and appreciating asset. Yes, that's what you're doing. You write off a little bit on the home every year as it's depreciating. Depreciation is limited to homeowner occupied. The IRS requires investors to depreciate their investment property. Tax depreciation is a cost recovery. That I don't know. They call it a cost recovery. I will say yes here because I don't see the answer. I'll say yes. The basis of an asset includes the sale price, acquisition costs, and any capital improvements. Depreciation is limited to investment properties only. Okay, they got me on that one before, and I still got it wrong. It's to investment properties only. All right, what is the name of the method that investors use to calculate their annual property deduction? Straight line, I believe. We had this on another video, and they're repeating it again. Okay, this one's for commercial, and this one is for non-commercial. And right now we're talking about investment properties, not commercial. Straight line for commercial. What'd I just say? 39. I only know this because we had another video on this just recently, as a matter of fact. All right, investors in 1031 exchanges. All right, 1031 exchanges. Can you tell me more about this? It's transferring property and deferring the transaction's tax impact until sometime in the future. These exchanges are known as tax-deferred exchanges. They are under the 1031 code of the IRS. And an owner of the real property can sell that property and reinvest the proceeds into the like kind of property. So it could be like a house into another house, not a house into a commercial property. Or not a house into an apartment building, or not a house into a warehouse building. It's got to be the same kind of property. So that's what a 1031, and that will help you avoid some tax implications if you go to sell, and especially if you're selling before your 3 years are up or your 2 years are up, and you don't want to pay a capital gains. All these types of things you need to find a good accountant that knows all these little secrets, that knows these secrets of investing in real estate, so that you don't, so that you can avoid all these. So here, right here, defer all your capital gains. I don't know about the interest-free loans. Let's try it and see what it says. Just one. That's it. Just capital gains taxes. That's all it does. Investment must be invested for business purposes. We're still talking about 1031s here. Must be held for business or investment purposes. That's what it says. The proceeds from the sale must pass through the hands of a qualified intermediary. All proceeds must be reinvested. Any cash proceeds will be taxable. Replacement property must involve equal or greater level of debt. All timelines must be met. And this is all over the United States. This is not like a Maryland thing, by the way. All right, trust funds for income property. Any prepaid rent paid for more than a month before the rent is due. Security deposits paid in connection with a lease. Trust funds must remain in the account until they are dispersed under the terms of the lease, the property management agreement, or legal provisions. Brokers who perform property management functions and handle rents and security deposits, they need to keep these in an escrow account or a trust fund account or a trust account, they're sometimes called. They need to establish a separate escrow account for each property, and if you get caught not doing this, you can get heavily fined. So no money can be dispersed from these accounts. It can't be commingled with your personal stuff. It needs to be totally separate and needs to be specifically for the property. Security deposits related to the lease should be deposited into the escrow account. Current rent paid less than a month before its due date must be deposited into the account. Trust funds remain in the account until dispersed according to the terms of the lease, the property management agreement, or legal provisions. So this is false. Current rent can be deposited into an operating account. Prepaid rent more than a month before its due date should be deposited into an escrow. Less than 1 month. Okay, so if it's more than 1 month, it's got to go in the escrow. Just to make that clear. Now, if you like property management and your brokerage has a property managed department, then that might be good for you to get into. Have a specialty in the real estate. You get your license first, your salesperson license first. It's always good to have that under your belt. And then you can get into the MLS, the MRIS, whatever system you have to check out properties. We have 10 questions here. I think we can miss 4 and still pass. But we don't want to miss 4, do we? Appreciation. Appreciation. That's hilarious. Maybe we should Google this. Let's Google it and see what it says. Appreciation in real estate. Increasing value over time. Okay, well, we're going to leave it alone then. Julius just sold one of his investment properties and used the proceeds of the sale to invest in some equipment for one of his other buildings. Can he defer the capital gains taxes on the sale of the investment property? I don't think so. Because it's not a like kind of property. I don't think so. I don't know if that's the right answer, but I don't think he can do that. Terrell and Barr bought a commercial investment property in 2009 during the real estate markdown. Through what year will they be able to depreciate the income? Depreciate the investment. Good question, boy. That's a good one. I can't remember if it's 40 years or 30 years. I'm going to pick this one. We probably might get that one wrong. Who is responsible for ensuring accessibility requirements for commercial properties are met? Property owners, property managers. In investment, each type of depreciation is defined by a particular event. Which of the following describes this depreciation type and event? I want to say it's this one. Economic depreciation and tax depreciation. That's what I thought it was. Okay, what advantages does 1031 have? Malcolm purchased an old convenience store, and after After renovations, will open a small vegan grocery. He paid $517, of which $417 was the building. Renovations cost him $107. What does the $524 represent? His investment basis? I don't know. Jennifer is the owner of the single-family residence in which she resides. How long can she take to depreciate her property? All right, Amy owns a salon and spa. She's leasing a prime real estate in which she's installing salon chairs, massage tables. What are these considered to be? Trade fixtures. To prevent commingling and accidentally using the funds from one income property for the expense of another, a broker should separate escrow accounts for each property. All right, I passed. Barely, but look at that. Just made it, too. All right, appreciation, increase in property value. And this was correct. It was a good guess, right? It was not, he cannot defer the capital gains because he didn't reinvest in the like kind of property. Oh, yeah, this one I got wrong. Okay. It was 2048. That was going back and forth with that one. I was getting ready to hit 2048. Yeah, depreciation is 39 years for commercial property. Okay, who is responsible for ensuring accountability requirements? And if you're taking any screenshot, now would be the time. If you want to save these questions and study from them. Okay. I got this one right. Yay, I was going back and forth between that and that, so I'm glad I got that right. 1031 deferred. This one is depreciable basis. Okay, what does the amount 524 represent? Depreciable basis. And this one's 0 years. Personal residence cannot be depreciated, only income investment. Oh, that was kind of tricky. Yeah, okay. Got me there. See, those kind of questions might be on your exam for sure. You see how tricky that was? I'm thinking income properties because that's the subject. And they threw in a single family residence. But they didn't specify it was an income property. So I was making an assumption it was an income property. Okay, now it makes sense to me, the trade fixtures. You know, somebody installs an oven. Let's just say they have a catering company and they bring their own oven in. I mean, that makes sense now with the oven. Or they're starting a restaurant, they bring their own kitchen, and they take the oven with them. Couldn't figure out what the oven was all about. It was confusing me. I'm thinking of a single family home. Like, I don't see too many people walking out with their ovens. But in a commercial property, it makes total sense. Now, the next one might only pertain to Maryland. So, I don't know. It says Maryland Code of Ethics. So, if you're coming back for the next video, you might want to wait. It might be only pertaining to Maryland. Okay, we are on the home stretch. We're going to be getting near the end. I might do a video at the end of this course, just thanking everybody who actually watched it.